What challenges does OPEC face in energy transition? Imagine a world where the oil that once powered entire economies begins to fade into the background. That's the reality OPEC is navigating right now. As the global push for cleaner energy grows stronger, OPEC faces some tough hurdles. First, there's the question of how much oil people will still want in the future. While OPEC expects demand to grow slowly over the next few years, new technologies like electric vehicles and green hydrogen could cut into oil use faster than expected. This makes it hard for OPEC to plan how much oil to produce without risking oversupply or shortages. Then, there are the rules and policies coming from governments around the world. Countries are setting stricter climate targets, putting carbon taxes on fossil fuels, and encouraging renewable energy sources. These policies could lower the demand for oil, which means less money for OPEC members who relying heavily on oil exports. But the pace of these policies isn't set in stone, so OPEC has to stay flexible and ready for change. OPEC also faces the challenge of balancing short-term needs with long-term goals. Sometimes, OPEC increases oil production to keep prices stable and meet immediate demand. But this can lead to oversupply, which causes prices to drop. In a world shifting toward cleaner energy, maintaining high production levels might not be sustainable in the long run. Investors need to watch how OPEC manages this balance, as it impacts the stability of oil prices and their investments. Another obstacle is competition. U.S. shale oil has become a major player, adding more supply to the market and making it harder for OPEC to control prices. Meanwhile, renewable energy sources like solar and wind are gaining ground, gradually eating into oil's market share. To stay relevant, OPEC might try to diversify into cleaner energy options like green hydrogen, but shifting focus involves big investments and risks. Funding new oil projects is also becoming more difficult. With lower oil prices and increased environmental concerns, banks and investors are less willing to finance exploration and drilling. This could slow down future oil supply, leading to potential price spikes if demand remains steady or grows unexpectedly. Lastly, OPEC's reputation is under scrutiny. As the world emphasizes sustainability, critics question the organization's role in supporting fossil fuels. This can influence investor confidence and affect the flow of capital into oil-related assets. All these factors mean that while oil will likely remain as important for some time, the sector faces more uncertainty and volatility. Investors should keep an eye on OPEC's policies, technological advances in clean energy, and global climate efforts. These elements will shape how oil prices move and how the energy market evolves in the coming years.